Imagine a calm Saturday morning. Markets are closed. The world is at rest. Then, with a single statement broadcasted by the US president, the market world finds itself catapulted into chaos. Picture this: the familiar landscape of silver trading suddenly transformed, akin to a battlefield after a surprise ambush. The president's words cut through the weekend silence like a hot knife through butter, a whisper of an artificial shortage, the most significant scene in half a century. Panic ignites, and just like that, global markets stand on edge. Have you ever seen dominoes fall? Each one toppling the next, and fast? That's how the market reacted. It's a chain reaction that nobody saw coming. In the trading realm, this is more than just a ripple. It's a seismic event. Silver prices, usually a slow-moving giant, now a bullet train. Over the course of mere seconds, the price catapults from a solid $100 to an eye-watering $102.99. Yes, you heard right, a true testament to the speed of fear and greed. But what ignited this explosive shift? A looming threat, like storm clouds on the horizon. The US president's offhand mention of a 100% tariff on Canadian goods. Canada, the silent titan of silver supply to the United States, now cast into the limelight. The threat alone delivers a chilling premonition, an impending shock to the supply chain. Insidious market isolation brewing. Think of Canada not just as a country, but as a fortress of supply. A critical ally morphing into an estranged entity. What happens if the drawbridge is lifted? American manufacturers trembling at the thought. The implications ripple outwards, threatening to choke the very lifeblood of industry. Meanwhile, our metaphorical soldiers, the traders and investors, stand bewildered amid this market battlefield. Strategies falter. Panic seizes the herd. A market driven to the fringes by a single voice. The genius of leverage and supply now questioned, teetering on the edge of collapse. As Saturday gives way to a restless Sunday, the stage set. Come Monday, will it be a story of survival or a capitulation? The dust has yet to settle, and the intrigue only deepens. In this tense moment, expecting the unexpected is the only certainty. This is what one statement does. It is not simply a market fluctuation. It is an exposé of our interconnected world. Ready yourselves. The ride is just beginning. The silver market thriller is set in motion, and the narrative is anything but dull. Ready or not, here comes the storm. Have you ever seen a market's heartbeat spike with such intensity? As the clock ticks into early trading hours, the silver pit crescendo reaches its first peak. Picture traders locked into screens, adrenaline surging, fingers poised above keyboards like soldiers ready to unleash their arsenal. What caused this fever? A silence from a superpower, an embargo threat. Each second, a tick closer to chaos. Dive deep into this opening play. The opening trade gap, flashbang. It's Sunday night, January 25th, 2026. Silver prices that closed the prior week at $100 now edge upwards to $102.99 in the seconds after the president's words. A staggering leap. This gap is the first fissure of a greater quake bound to shake the markets. A seemingly calm expanse of open trades now ruptured to incite excitement and dread in equal measure. Amidst the turmoil, a single idea germinates. The drastic proposal of a 100% tariff on Canadian goods is like a sword hanging over the market's neck. Canada, our northern neighbor, bastion of silver, now finds its role redefined. Once a fountain of abundance, poised at the brink of a drought, should the proclamation manifest into policy. The silver veins which ran unchecked into U.S. soil now face the specter of drought. By now, every hedger, speculator, and producer knows what's at stake. The specter of isolation haunts them all. Picture American manufacturers cornered, bracing against a tsunami of price hikes. What happens when their raw material fortress crumbles? The fear isn't slow. It spreads like wildfire, swiftly resurrecting the ghosts of supply chain interruptions past, kindling nightmares of productivity stalled, margins squeezed to oblivion. Inside trading floors and on office calls, the game now is anticipation. Clients and brokers, drawn into hastily arranged war rooms, grapple with the calculus of market survival. The stakes escalate as they analyze graph patterns not for their usual trends, but for the story of human psychology they lay bare. This is not just numbers. It's the very embodiment of fear and opportunity locked in a dance as old as markets themselves. Industrial implications loom large. In boardrooms, decision-makers confront this fluid landscape. The potential ramifications reverberate through sectors far beyond the silver market. Stakeholders in electronics, solar, and AI industries sweat-fevered negotiations over supply guarantees. A jarring realization grips them. The cost of silver, once predictable, now a merciless wildcard demanding serious strategic recalibrations. As the market navigates this treacherous narrative, attention shifts toward pricing models, revealing their fragility. Here, sudden volatility isn't just an anomaly, but the new reality. Investors who slept through the weekend oblivious now face the challenge of a market transmuted before their very eyes. FOMO, fear of missing out, engulfs the inexperienced. An insidious whisper courses through the ranks. The opportunity is as fleeting as it is explosive. Chart watchers notice the lines tracing upwards, but it's more than mere speculation. It's destiny unfurling on the screen. Prepare for intense volatility as the market dances between fear and resolve through this coming week. This is the anatomy of today's silver saga, the set stage, an unpredictable journey. As the curtain rises, all embrace the ride, both old hands and greenhorns alike, as chart patterns and primal instincts dictate their moves in this high-stakes market ballet. A theater of intrigue awaits. Canada stands at the precipice, a spectral presence in the unfolding drama of the silver saga. As the potential tariffs loom, they clutch the marionette strings of market chaos with unnerving expertise. The Great White North, a reliable partner, now transformed into an anxious specter, casting long shadows over the market. This isn't just a matter of border politics, it's a cataclysm waiting to leap from the whispers in political corridors into the roars of trading floors. Picture this: the Canadian wilderness, a vast expanse beneath which veins of silver course through rock like lifeblood. Streams once flowing freely across the border could now be dammed by the iron will of political decree. With Canada providing up to 48% of the U.S.'s silver imports, any disruption would be akin to slicing through a vital artery. Manufacturers, those industrial giants standing tall upon the shoulders of this resource, will soon find themselves not champions of commerce, but gladiators locked in perilous combat against scarcity. The connivance of tariffs would ignite a fortification around Canadian resources. A once generous embrace turned into a steely grip. The ripples of this change wouldn't stop at mining operations. They'd cascade across industries, battering everything from car parts to cutting-edge tech reliant on precious metals. The specter of isolation needs no invitation to wreak havoc when national policies play Russian roulette with commodities. Inside the boardrooms of Toronto and Vancouver, corporate titans gather, their silk ties strangling the air with unresolved tension. They deliberate on geopolitical maneuvers, currency hedges, and supply chain gymnastics. The tension is palpable, an acute awareness that their broader economic ecosystem hangs precariously, as if tethered to a live wire. They brace themselves for a surge, a jolt that would force every calcified process to melt down and reform in an instant under the white-hot heat of market pressure. And across the border, in the cavernous skyscrapers of New York and Chicago, traders sweat, both figuratively and literally, as they consume every ore index and forecast like their gospel. Numbers cascade down screens like a relentless ticker tape of doom. Has the market's desire for silver become a hangman's noose, tightening with each plotted point? Every trade now carries the undercurrent of existential questioning. Canada, it seems, controls more than just the direction of supply. It shapes the emotional narrative of the market. Investor sentiment is twisted into a Gordian knot. Across the financial landscape, cavalry tactics shift as analysts pore over base metals reports, looking for any hint, any leak, any advance warning of the siege to come. They're hunkered down, strategizing midnight assault orders. Markets don't just move, they're being moved, shook, tested by the very mortal grip of geopolitical uncertainty. It's now a battle of resilience. In the trading pits and the corporate corridors, a collective holding of breath. A game of who blinks first. Silver, no longer just a commodity, but a chess piece in a grander contest of supremacy and endurance. The question looms: will they meet the challenge with courage, or falter under the unbearable weight of a severed supply artery? It seems for now that Canada's role is redefined for this chapter. The orchestra of markets plays on, and the next note hangs in suspense, a testament to the unpredictable symphony that is commerce. The seismic shift hits, silver becomes the battlefield. Public sentiment explodes like 1,000 firecrackers, each a reflection of frustration and rage against the machine. A once docile crowd transforms into a rabid assembly, chanting their grievances about rising costs in consumer electronics, driven by the silver squeeze. Smartphones, laptops, even the newest electric vehicles, all victims of this metallic bottleneck. It's pandemonium at the gates. Parents protest the absurdity of paying more for gadgets that just yesterday seemed affordable. Imagine a child's birthday gift, a tablet, now as elusive as moon rocks, its price inflated by fear and scarcity. The scenes look like battlefields of modern commerce, bustling electronic stores, now empty wastelands, stripped by the vultures of panic buying, and in the midst of this uproar, policymakers scramble. Political chess in motion. Who anticipated that a minor escalation over tariffs would ignite a conflagration of public uproar? Fingers point, accusations fly. Consumers feel like pawns sacrificed in a high-stakes game, where the stakes are both ideological and tangible. The specter of a collapsed supply chain looms over the national psyche like a dark cloud, moving with the merciless winds of geopolitical tension. Underneath this emotional upheaval, the dynamics of opportunity simmer. Opportunists smell blood. Hedge funds, those financial predators, see weakness as a sign of fresh meat. They pivot, adapting to the chaos like seasoned mercenaries. Short sellers find themselves caught in their own carefully laid traps. Their cries for regulatory intervention echo hollow in the cacophony of market dynamics at their most primal. Yet amid the anger and chaos stands a startling truth. This moment of turmoil is a mere prelude, a curtain raiser to a saga that is bound to redefine market strategies, consumer behavior, and political maneuverings for years to come. Each price spike, each panicked release of strategic reserves only serves to underscore the brutal reality, an illustration of the tangled web we weave when global economics are strangled by local discord. It's a collective introspection. In the quiet aftermath of outrage, a question lingers, a whisper amid the roar. How did we reach this point? What lessons remain unlearned as the world presses on? This chapter closes, leaving players in this drama pondering their next move, each decision carving new paths in the annals of economic history. The future awaits, uncertain yet inevitable. The story of silver's rise and its dramatic impact on the consumer market is just beginning. Just when the storms seem to pass, an unseen force pulls the strings and unleashes the true fury of the market beast. Welcome to 48 Hours of Chaos, a whirlwind of causality, shifting tides, and seismic imbalances that left traders gasping for breath. The silver market wasn't just reacting, it was detonating. Picture the opening bell on January 25, 2026, the moment a financial earthquake begins. Tectonic plates of trading desks across the globe shuddered as silver prices rocketed from $102.99 to vertiginous peaks nearing $110. A vertical climb that's not just rare, it's a freak occurrence. Traders clutched their chests, spiraling in disbelief. How could such monumental shifts unfold in mere minutes? The groundwork was laid by political whispers and loud proclamations. The threat of a 100% tariff on Canadian silver was no idle tale. It was a nuclear option on the geopolitical chessboard. Market participants, like generals strategizing on war maps, faced the dark realization: liquidity evaporates. Stop-loss orders trigger en masse. Orders vanish into thin air. This spectacle of pandemonium sees the machines, the savior of modern trading, choke on volatility spikes, their algorithms grappling with deceitful shadows of turbulent charts. As the situation unfolds, the battlefield reveals itself. Smart money against the maddened horde. "Sell it all!" shouts the panicking crowd, ignorant of the intricate dance they are part of. The so-called smart money, hedge funds and Wall Street titans, smell blood. They poke and prod at the market's soft underbelly, profiting from desperation, from the panic of the uninformed masses. This isn't trading as per usual, it's a brutal skirmish, a melee where the weak see their fortunes dissipate. Yet the real narrative lies beneath, the anatomy of this financial war. Stop losses crushed, leveraged positions obliterated in the relentless fury of margin calls. The battlefield littered with casualties as bullish buyers scramble to re-enter in desperation, fearing a missed train. A train that doesn't just leave the station but rockets away at supersonic velocity. In the labyrinthine constructs of futures and physical markets, new secrets unfold. Paper promises collapse under their weight as demand for physical silver explodes. This isn't simply a market inefficiency, it's a systemic breakdown. Traders pound their fists against screens as promises of delivery become voids filled with air. A supply vacuum unleashing untold volatility, with COMEX inventories plummeting to record lows, a canary in the coal mine for what's yet to unfold. This is not just numbers flashing across screens, this is silver's brutal tale of the unexpected, a narrative unfolding in the real economy, where manufacturers scramble to secure every ounce. Silver, the linchpin in technological progress, now at a premium unrivaled in modern history. Factories slow to a crawl. Assembly lines threaten to halt as input costs start to rival product prices. A key cog in the economic machinery about to be stripped bare. The question of supply and demand isn't simply academic. It's an existential query for businesses worldwide. The industry's scrambling for alternatives, as if steel could replace silver's intrinsic value in tech hardware. An inexorable squeeze with no end in sight. Prices continue their ascent. Firms caught in a vice of costs. Silver has turned from a commodity to a choke point. This is a battleground of emotions, profits, and unseen consequences. And as dust settles, only questions linger. How deep does this rabbit hole go? Which players have the audacity to leverage these turbulent waters, rising as others falter? And most importantly, who in this epic saga will redefine the intersection of politics, economics, and individual fates? The Silver Saga has just begun. Market warriors remain vigilant, poised for the next move in this high-stakes game. Where will you stand when the dust sets? In the thick of the fray or standing victorious on the edge of oblivion? This chapter of market mania closes with echoes of defiance and the enigmatic promise of the next turbulent act. Behind the deceptive calm of politics, the intricate machinery of market manipulation grinds incessantly. Chapter 6, a dissection of the beast known as the political bluff. It's not just rhetoric, it's a weapon wielded with precision, unveiling how politicians, draped in their power, unleashed chaos on unsuspecting traders. The president's words hung in the air, a looming threat of unprecedented tariffs, a tactical bombshell. Overnight, speculative tremors ignited in trading pits worldwide. On paper, it's a bluff. A political ballet in full display, but on the ground, it's a kinetic assault. Traders scramble, trying to decipher reality from smoke and mirrors amidst a frenzied market. Short sellers became public enemies, their financial fortresses breached in broad daylight. Each tick downward a dagger in the heart. Margin calls thundered through the ether, louder than artillery. Every stop-loss breached a casualty of the unfolding pandemonium. Desperation writ large on screens, a battlefield of numbers and sweat. Geopolitics had morphed into an existential threat for these market titans. As Canada, a silver Goliath to the north, stands on the brink of market severance, a single signature away from disrupting the supply chain, one ink stroke from chaos. Real consequences marching in lockstep with political bravado. The dealers of precious metals, once hidden in the shadows, are thrust into the spotlight. Within this political theater, the United States pushes the envelope, a convoluted game of chess where nations, not pieces, are sacrificed. Silver, a commodity transformed into a symbol of resilience and conflict. Manufacturers face the sharp end of this bluff turned real. A looming vacuum of resources suffocating technological progression. Contract defaults threaten to cripple entire sectors, where silver is the vein feeding industry's progress. A global stage where countries wield tariffs like scalpels, a surgical operation with high stakes and little room for error. Diplomats barter with a volatile commodity as their currency, while market strategists plot revenge. An ever-escalating continuum, where the line between market strategy and national policy blurs. Amidst this chaos, the market's murmur grows. Silver, once a mere element on a periodic table, now the axis upon which fortunes turn. Those with foresight to read between geopolitical lines stand ready, while others, ill-prepared, face annihilation. This is no ordinary confrontation. It's a war with no end in sight, a struggle between political forces and market realities, with silver at its epicenter. In the shadows of these machinations, astute investors prepare for a new dawn. Understanding this is not just about profits, it's about survival. As the lines of this chapter close, those who dared to ride the storm find themselves carved into the annals of market lore, future kings of an empire unpredictably rebuilt.